Let's go live to Nicki Hutley now from Deloitte Access Economics. Good to see you this Monday morning, Nicki. We are looking to Bangkok at the moment. A lot of things happening on the international stage. This strategic partnership. Look, it would be a trade deal that actually takes in half the world's population, but there's a few countries that are not close to signing up, India being one. How significant?
Well, obviously, India is very significant. You know, at the moment, it's not one of the world's largest economies, but the sheer size of its population makes it an economic potential powerhouse. India's on a trajectory where China was maybe, a quarter of a century ago. It's a very unusual economy in terms of a developing economy because it hosts so much more of services, intellectual capital, that sort of thing. It doesn't fit the normal model, but it is a crucial part to, if we are going to have a trade agreement, that encompasses most of the world, it really needs to encompass all of the world, and particularly the largest and those that are on their way to becoming the largest economies. Otherwise, we end up just having the worst outcomes for some economies, and it doesn't work. What we actually want to do is have free trade right around the world with nothing in place whatsoever. So that would be the ideal. If you end up with sort of half of that, it's not really as good as it should be, is it?
Well, on trade, do you believe that we're getting closer to a trade deal between the US and China?
That's almost a trick question, isn't it?
Yeah.
I wouldn't bet the house on it, let's put it that way. It's certainly, the language does seem optimistic, and the notion now that they've got these different phases of agreement, so we're heading into a phase one of 3 phases. Maybe that's kind of how they get the language so that they can agree at least on some things and not have to impose the next round of tariffs on December 15th, which of course is going to really hit home when it hits laptops and toys and all of those sorts of things that consumers buy. So the US will be very much wanting to avoid this, as obviously will China. But we've heard this before. Less than 6 months ago, they said they were very, very close. So until I see it, I don't believe it. But Larry Kudlow is definitely being quite optimistic out there. Not sure what's behind that, unless he genuinely believes that they are closer. So I will keep every finger and toe crossed that it is the case, and we start to see some movement here finally.
It is Cup Day tomorrow, but more importantly, it's when the RBA board meets. What do you expect?
Yeah, well, I have to say it's the promotion of the slaughter of innocent racehorses, but that's my view on tomorrow. But apart from this, sorry, I just had to get that out there. I boycott the Cup. But in terms of the RBA, obviously all eyes at 2:30 on Martin Place. No one expecting to see a change, or not many people expecting to see a change this time. But the market is still looking for one more cut. We're certainly in that camp. Is it going to be December or February? Why does the Reserve Bank need to wait one more month? I think they will sit on their hands for a little while just to sort of see a little bit more data. But there is no question that they do want to go, and probably the main reason why they would hold off is previous rate cuts have obviously dampened consumer sentiment and confidence rather than lifted it, and that's the thing that they want to watch. The other thing is just what's happening on house prices, which, now 4 months in a row, quite strong rises in Sydney and Melbourne, and getting back to their, close to their previous peak. So that would be a little bit concerning for them.
A lot of people think, Nicki, because the US just had a rate cut, that would probably, that's part of why we won't get one tomorrow, and probably won't get one this year. Do you buy into that?
Well, no. If anything, it's the other way around, because if the Reserve Bank, it has several different arms to us, and one of them, of course, is the currency. And by not cutting rates in lockstep with the US, that means that we've in fact seen the Aussie move closer to 70 cents in the last week or so, and that's not what they particularly want. So it doesn't actually make sense for that argument to me, but they can afford to hold off for another month. They don't have to go because the US is gone, but it's certainly not a reason for them not to go. If the logic is, well, the US is gone, so the US economy is doing better, and certainly the job numbers continue to pleasantly surprise, then maybe the world economy is not as bad as we think. But I think that's probably looking at the glass a little bit more than half full, when really it's only just over the halfway mark, maybe.
And just quickly, Shane Wright had an interesting piece on the fiscal stimulus, the tax cuts, and if they've flowed through to the economy. He was casting a bit of doubt on how effective they've been.
Yeah, and look, this is something we've been calling out for some time. It's the nature of the tax rebate. Rather than a cheque in the hand, it's something like a little bit more in your bank account as a refund. And we know now that that's a lot lower. You know, figures of around 1,000 were bandied about, you know, because that was the higher end of the market. The average is closer to 400. We know from the banks it's been sitting there for a while and it has not been spent. So let's look at those retail trade numbers this week and see where we're at. But not looking very good from what we're hearing on all fronts, unfortunately. We're going to need some fiscal firepower at Christmas time, and it's looking like we'll certainly get some of that. Aged care packages is going to be one of them, potentially something on New Start. So there's a few things the government's clearly looking at, and we can expect some stimulus at that mid-year economic statement in next month.
Okay, Nicki, thank you very much.